Could Google go out of business for shady back deal business dealing with Apple? And EV electric vehicles are causing anxiety. Plus, Ripple speaking in Boston in a couple of weeks about U.S. regulation, and Chinese Bitcoin miners raising alarms around the U.S. national security. All that and more. This is what's trending. What's up, y'all? Welcome to Urban FinTech at the G Spot Studios channel, where we try to make finance and technology sexy. I'm your girl, G. The CEO of Ripple, Brad Garlinghouse, has been invited as a keynote speaker for the Boston Institutional Digital Assets Forum next month. According to the official notification, Garlinghouse will be addressing the critical topics surrounding U.S. crypto regulation. The forum is scheduled for Monday, December 4th at District Hall, Boston. BDAF platform is where experts in the crypto, blockchain, and regulatory spaces discuss matters related to the adoption of digital assets in institutional settings. This December event is the second edition of the series. Now, at this event, they are looking at industry leaders, including the Ripple CEO, will delve into the most pressing issues influencing crypto adoption. Also, the event will showcase innovative solutions shaping the future of finance. And this is nice. This is great for the U.S., and I'm proud that we are on this journey together. After committing $100 billion to the EV transition, car makers are feeling the anxiety. U.S. automakers have said in recent years that they'd spend billions on EV production. That seemed like a good bet, especially after the Biden administration introduced financial incentives to aid in its goal that half of all new vehicle sales should be electric by 2030. But lately, there's been a downshift. GM, Ford, and even Tesla said they delay spending on electric models and factories. GM ditched its goal of building 400,000 electric vehicles by next summer and is delaying the release of some new models as automakers second-guess electric financials. Ford pushed back its plan to spend $12 billion on EV factories, saying customers are reluctant to pay extra for the electrical whips. Tesla, which accounts for half of all EV sales, might delay building a $1 billion plant in Mexico. Despite steep price cuts, Tesla's Q3 sales fell from Q2. Last quarter, U.S. electric vehicle sales were up 50% from a year ago, growing faster than any other major car category like gas and hybrid, and accounting for 8% of all new car sales. Still, execs expected even stronger growth to validate the major moolah they're investing. Electric vehicle sales growth has cooled despite price cuts to fuel demand, not to mention federal tax credits of up to $7.5 thousand for buyers. So they're giving money for people and tax credits for them to buy these electric vehicles, but the sales aren't there. Now, Carco says they're still committed to the electric transition, but intense competition has pushed prices down. The EV price slashing race has cut into profits, while demand, though strong, isn't enough to offset the hits. And for your information, Tesla is the only U.S. car maker with a profitable EV business, and its profit plunged 44% last quarter after it cut prices by approximately 25%. And since we're on the topic of EV, Exxon hedges its big oil bet by investing in lithium, a key ingredient of the EV future. Exxon is expanding its non-oil investments to mining the metal used in electric vehicle batteries, lithium. The energy giant aims to start mining lithium in Arkansas in 2027 and plans to become one of the world's top producers by ramping up production to approximately 100,000 tons by 2030. Though Exxon is known for fossil fuels, the fun fact is that Exxon scientists invented the lithium-ion battery, now used in EVs. They did this in the 70s, but they stopped making batteries shortly after. The oil company's return to the biz may be surprising, but this is something that they kind of have been already a part of. And now on to the blockchain front. Chinese are Bitcoin mining and the operations raise U.S. national security alarm. Chinese cryptocurrency mining facilities have been discovered near critical U.S. sites, including a Pentagon-supported Microsoft data center and Warren Air Force Base. The U.S. is wary of potential surveillance and intelligence collection by China through these operations, as well as risk to the national energy infrastructure. Concerns also include China's potential influence on Bitcoin price dynamics and facilitating illicit financial activities like money laundering for Mexican drug cartels. Chinese cryptocurrency mining operations have been discovered in 12 U.S. states, raising national security concerns, including Arkansas, Ohio, Oklahoma, Tennessee, Texas, and most notably, the Pentagon is overseeing surveillance of a Chinese Bitcoin mining facility in Cheyenne, Wyoming. And we know that the United States and China met the other day. It seems like they left on good standing, and so hopefully those talks will help us in resolving this issue. And what is the future of AI? In a move that continues to jolt the biz world, ChatGPT maker OpenAI fired CEO Sam Altman, who led the company for 4 years. After his ouster, some senior employees resigned. As of yesterday, OpenAI had named its third boss in 3 days, Twitch co-founder Emmett Shear. And now this may not have been yesterday because this article is a little dated. Now, while OpenAI's biggest investor, Microsoft, quickly scooped up Altman to lead a new AI unit, analysts are comparing the news to when Apple gave Steve Jobs the boot in 1985. This has prompted pushback. In response to Altman's sacking, 650 plus of the company's approximately 770 employees signed a letter saying they might quit and join their former boss's Microsoft team if the board doesn't step down. Employees reportedly refused to attend an all-hands meeting with new chief exec Shear. Now they're at odds. OpenAI hasn't been clear about why Altman was shown the door, other than saying he wasn't consistently candid with the board. The Atlantic reported that a rift had formed between Altman, who was pushing to commercialize AI products, and the side of the company focused on safety and regulation. Now it's up in the air. The status of the $86 billion valuation OpenAI was set to receive. Who knows whether it'll be still valued that same price with Altman gone. But is there a winner? Microsoft clearly is. Not only does it own 49% of OpenAI, but it also now has its star exec plus the new AI division he's building. And it didn't have to deal with an acquisition fight to get it all done. So still, if the OpenAI board steps down, it's possible Altman could rejoin. So who knows? We'll see. And speaking of AI, the Justice Department's antitrust trial versus Google ended last week, minus the closing arguments, but the tech giant has to wait till next year to hear its verdict. The Department of Justice alleged that Google has a monopoly on the search biz, and at the end of the 12-week trial, it got the cherry on top of its evidence Sunday. An expert let slip that Apple gets 36% of Google's revenue from search ads on Apple's Safari browser, where Google's the default engine. Now, if Google loses, it may have to rework these kinds of agreements. The extreme potential and penalty is breaking up the business. And the FCC targeted digital discrimination with new rules last week. Regulators say it's the first major U.S. digital civil rights policy which aims to block telecom companies like AT&T, Verizon, and Comcast from providing unequal internet service to different communities. AT&T has been accused of laying modern fiber optic cable in affluent areas while not updating old networks in low-income areas, but charging the same price. The rules are part of the Biden administration's goal to connect all Americans to high-speed internet by 2030. So as a minority who has experienced firsthand this happen with AT&T, this definitely is something that I'm glad they're addressing. I don't know what's happening in 2030, but all of this news is really good for the world and for our movement ahead. So I hope it's sexy news to you. It's sexy news this week for me. Let me know what you think in the comments below.
Yours